Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about USDCAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong level of previous monthly resistance, which is now turned support. Now, if we zoom in a bit more, we can identify this area even more clearly as exactly from here, all this previous move to the downside started and the creation of this red candle started. Then the market broke above that zone, and at that point, that previous resistance was turned support here. The market is currently testing the previous resistance turned support, so there is a good probability of getting a potential rejection to the upside being created away from this area. So the monthly time frame does seem quite bullish. We can also notice here on the monthly that the market currently is stuck in this range. We have the top of the range here and we have the bottom of the range here. So the previous high of this range is already acting as resistance. The previous low of this range is already acting as support. Now, in the long run, what this means is that until the market will remain bounded from a monthly perspective inside of this range, we could simply expect more horizontal price action to be created. So actually this zone here, which we can now identify with a different color, is simply an intermediate level of structure. And since the last test was of the bottom of the range, the next logical step would be for the market to want to go and test the high of the range. So to see what kind of liquidity there is at the top of the range. And since this intermediate level of structure is currently acting as structure support, this increases the probability of the potential rejection to the upside for the test of the high of this range. Now, let's keep that in mind and move down on the weekly time frame. Now, from a weekly standpoint, the situation is quite clear. We have a market which at the moment is testing important structure, which, as we have just identified on the monthly time frame, here in the weekly, we can identify even more clearly. In fact, we can see how the market is respecting this area in a very precise way. First, it was respecting it as resistance all across this area. Then, after the break above, the previous resistance was turned support and the market started respecting the area as support quite precisely. And as the market is testing this support and rejecting it to the upside, more bullish price action could be expected for the market to actually go and test that high of the range that we have previously identified on the monthly time frame. So let's keep that in mind and move down on the daily time frame. Now, from a daily perspective, what we can see is that at the moment the market just broke structure to the upside. We can see how clearly the market was creating lower lows and lower highs. Now the market broke structure back to the upside, creating the first higher high. So now we shifted from creating lower lows and lower highs to now creating higher highs and higher lows. So if the market will now go and retest this previous resistance turn support, at this point there is a very good probability that we could see some institutional longing at that point, potentially pushing the price higher. Now, speaking about institutional longing, let's go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing, and let's check the data precisely for the CAD. Now, what we can see here is that with the last reports, in the long run, net positions have been massively decreased. We went from having minus 800 to now minus 111K, essentially 111,000 net positions in the negative side. What this means is that there is a huge amount of shorts compared to longs from an institutional perspective, which currently is sitting at 131K shorts compared to only 20.2K longs from an institutional perspective, bringing the net positioning so low compared to the quite positive minus 800 that we had here. So what this shows is that institutions in the long run have been moving aggressively to the bearish side of the CAD, meaning to the bullish side of USDCAD, because every currency on the spot is traded against the USD. And if institutions are shorting the CAD, they are essentially longing USD CAD. And they went, in fact, from having 37.9K shorts on the CAD all the way up to having 131K shorts on the CAD. And we went from having 44K longs down to 20K longs. So clearly institutions have been moving to the bearish side of the CAD, therefore to the bullish side of USD CAD. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now, back to the analysis. Well, this means that from a daily perspective, if the market will now correct to this zone, there is a good probability, as we were saying, that we could see some institutional longing here, so even more shorts on the CAD, which at that point would potentially push USD CAD higher, because this is also a confluence of support area, because since we have an impulse, if then we want to measure the correction, we would have to take our Fibonacci from the low to the high of the impulse leg, which shows us how we have a 0.32 Fibonacci retracement here, which is lining up with this previous resistance turn support, therefore creating confluence of support. Because if we have multiple layers of support lining up in the same area of price, that creates confluence of support, which increases the probability of seeing institutional longing. So if we will see a correction to this area, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COD data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COD data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.